doing business in Africa is really hard, but once you crack it, your product becomes so sticky.
So that actually industries which were less regulated were growing the most.
Africa, if you're not educated on the types of instruments that work, you can easily make bad angel investments. On the angel investor side, I would say that's the primary motivation. It's not so much the commercial returns just yet. If you're looking for returns in Africa, venture capital is a betting game.
Hello everyone, welcome back to Investor Returns. I'm Ulyana Shtybel, and in this podcast we dive deep into the world of venture capital and angel investing. Today I'm joined by Kevin Irungu, an investment manager at the Front End Ventures, a 10 million fund focused on East Africa. Kevin led the setup and launch of the angel network called Local Capital, and I'm super excited to have with us today Kevin to share his experience of investing in an African region. So welcome, Kevin. It's a pleasure to have you with us.
No, thank you so much. I'm glad to be here.
So the first question that actually I have to you is to ask you to share with us your story, how you got in venture investing.
Well, that's an interesting one. I graduated from Georgetown with a degree in finance, and I remember when I graduated, the only thing I knew about finance was Wall Street. All the movies I watched about investment banking and your stereotypical corporate finance career, and I went in that direction. I joined corporate. For some time, I was at PwC. I joined private equity, and it was clear that there was a disconnect between what I was doing and my passion. So I came to quickly realize that I have to be passionate about what I'm doing. And so I quickly thought, okay, look, how can I use finance and my passion to build a career? So I did a bunch of research on the various sectors within finance, and I also realized that there was a bunch of capital flows into East Africa, particularly Kenya, in the venture capital space. I think the ecosystem is really ripe for innovation. And deep down, I also had a passion for entrepreneurship. So I really believe that entrepreneurship has the potential to catalyze development in emerging markets. And so I thought, look, venture capital merges is a perfect merger between my specialization in finance and my passion for entrepreneurship. So I pivoted from private equity and I joined venture capital.
Have you been mostly with the venture funds, or you've been doing your own angel investments?
Yeah, so when I initially joined venture capital, I did them at the same time. So I joined a venture fund, professionally as an investment manager, but I also started angel investing because I wanted to express my entrepreneurial energy. I wanted to support a local business, and I wanted to see what it takes for a local business to thrive. I think the best investors are operators, investors who have sat on the side of building a business. And so I was very cognizant of that. So I think we'll get into it later on, but that's one of the benefits of angel investing is you get hands-on experience with the business that you're investing in.
And can you share with us what is your size of the portfolio at the moment?
The portfolio that I've currently invested in with the fund I work for, we're currently 12 companies in. And in terms of my personal portfolio as an angel investor, that's 3 companies.
Yeah. And what actually you have learned from your first investment in a company till now?
So I think my first investment was actually in a brick and mortar business. It was in a service business. I'm really passionate about sports as well. So my first angel investment, I thought, look, let me actually invest my money in something that I enjoy doing. And so I invested in a football academy. There was an academy in Kenya that was set up in an urban location. They had a very good value proposition to capture the middle class market. And they were using technology to acquire customers and seeking to employ young people within that area. So I was sold. I invested, and what I quickly learned is the integrity of the founders you invest in really matters. And I was so sold on the idea that I did not vet the founder. And so that relationship kind of went sour once the business picked up because, once again, founder integrity.
Yeah. And you continue to invest in East Africa, right? And what is actually your thesis at the moment as a fund, and probably your personal thesis as well?
As a fund, essentially, our thesis is that we believe the future of Africa will be led by a young, tech-savvy population that is looking to become more autonomous, more productive, and safe. And so, essentially, we invest in businesses that will ride that wave, that will take advantage of the need for this young population to exercise their talents, their energies in a creative, innovative way, and to invest in businesses that are capturing value from that trend. So we try and identify businesses really early. We try and predict norms using current trends and then invest in businesses before those trends become norms. So essentially, if you are able to predict a future norm, it means you can get into the company really early at a low valuation, and essentially try to predict what will become a norm. And by a norm, I mean that it's virality. So it's widespread adoption, it is customer stickiness, and essentially product market fit.
And actually, about your personal portfolio, is it similar thesis, or what is your personal vision?
So my personal thesis is a bit similar. I would say right now, Africa, with its population and the structural and institutional gaps that we face as a continent, I think it's important to, and this is what my thesis is to look for businesses that are closing the gap between fully digital, fully tech, fully software businesses and brick and mortar businesses. So I essentially personally invest in only tech enabled businesses. So it is businesses that are augmenting technology on top of hard infrastructure. So a lot of sectors in Africa are not ready to migrate fully into tech adoption. And so there's already a huge opportunity for these companies that will help consumers move from manual systems to fully automated systems. And I believe that right now the opportunity is those middle companies that augment technology on top of hard infrastructure.
Yeah, in relation to that, actually, you prefer more like B2B businesses or B2C businesses?
So you make a good point, and that's a good segue into the African consumer. I think there's very little knowledge about the African consumer documented in terms of our consumer preferences, in terms of our habits. And so a lot of businesses usually go about trial and error in terms of figuring out the type of pricing to use, the positioning, the messaging. And so essentially, you find innovative businesses that come up with an amazing product, but they haven't positioned it well to acquire customers, or they haven't priced it well, or their GTM strategy is incorrect, but amazing product. So I think a solution for that, a stopgap mechanism, is to sell to businesses. Essentially, businesses have a bigger wallet, so they're able to buy for a higher price. And then number two, it's a way to get to many consumers. So essentially, if you, for example, acquire a fintech and the fintech has thousands, hundreds of thousands of consumers processing payments through their platform, if you're able to just capture even a small zero point 0.5 or 0.1% of those transactions via B2B partnership, you automatically acquire all of the customers of the business. So it's a shortcut to acquiring a large number of consumers as we try to figure out exactly how to sell to the African consumer, what segment of the population startups should target for them to acquire scale, because essentially there's a chicken and egg situation. Startups essentially have to target big populations for them to scale. Your serviceable obtainable market, or your serviceable addressable or total addressable market, has to be large enough to accommodate and to sustain growth. But at the same time, in Africa, the bottom of the pyramid, which is the majority of where customers lay, of course, are poor and are just trying to survive. So how do you sell to this? What you find is startups end up selling to this middle class population who have the propensity to pay, but who are not big enough, who are not sizable enough. So once again, B2B can help solve for that until we figure out how to sell at scale to this bottom of the pyramid population.
And I believe when you say B2B, it's actually really more about the partnerships, right? Because you're not just selling your product to enterprise who is buying your product, but because you mentioned about building a partnerships, let's say a telecom, right? Because they have access to the consumers. and probably selling in that way co-branded products. Is it what you mean?
Yeah, so both. I think there's you can either sell directly to other businesses, or you could align incentives. So the best way to develop a sticky B2B product is to align incentives among stakeholders within that supply chain. So if you can convince, for example, government together with the largest telco as well as the biggest internet service provider that your product will benefit all of them, then you realize that a partnership essentially helps you develop a flywheel automatically, because you're leveraging the marketing power, you're leveraging the brand of all these partners, and because they are incentivized, because they know that that partnership will lead to more revenue for them, they are incentivized to market for you on your behalf. So yes, partnerships I think really have to be intentional, because a lot of startups as well. I analyze a number of data rooms, and when I go to the partnerships folder, I see a bunch of signed partnership agreements there. But a lot of the time you realize they are not set up in a way that you can extract or commercialize that partnership.
Okay, it's interesting, definitely. The region is growing and there is a lot of things to explore still. So, from your perspective, when you're investing in those businesses, are you looking to invest in startups that have a potential to scale globally, or you actually like looking for those who are solving a particular local issues and local problems?
I would say both, but mostly the ones who are solving a local problem, because we've seen a lot of startups that have tried to expand geographically too soon. And their rationale is that, look, maybe we are selling to a small number of customers within our country because, once again, the ability to pay. So let's expand geographically because maybe we can also acquire the ones who are able to pay in the neighboring country. But I don't believe that's the approach to use, especially if you're going for the B2C angle. Doing business in Africa is really hard, but once you crack it, your product becomes so sticky and the virality picks up almost immediately once you actually solve a problem. So, in developed countries, the focus right now for startups is to increase efficiency, is to do things faster, better. But in Africa, we are still at the initial step of the problem chain in terms of just solving the problem. So if you can figure out a way to solve a problem, I'll give you an example of M-Pesa that they always talk about in Kenya that went viral. And once again, most of M-Pesa transaction volumes come from the bottom of the pyramid. But M-Pesa was able to solve a pertinent problem of money transfer and financial service inclusion for the underbanked in Kenya, using feature phones. And because of that, it went really viral, even if it was a new innovative product. So I think for B2B companies, I would invest in companies that are trying to compete globally, because it's a lot easier to build a tech product that would appeal to businesses because their preferences are not as diverse as individual customers. So, for example, if you're building a call center solution, which is one of the companies in our portfolio, they are able to build it in a way. Of course, you build a solution that is locally nuanced, but by and large, the product is pretty much the same as Zendesk and the global competitors. It's just about efficiency.
Yeah, and what about industries? Which industries do you see are the next wave of innovation in Africa?
Yeah, so I think fintech, we can't get away from fintech. Right now, I think probably 80% of the unicorns in Africa are fintechs. 80% of the acquisitions in Africa are fintechs. I think about 90% of all the exits are from fintech companies. That being said, fintech, of course, is saturated with a lot of companies trying to solve solutions. So it's about identifying the winner within that space. But most importantly, it is the companies that are leveraging the infrastructure that has been laid by mobile money. And that's why fintech is dominating over and above other sectors, is because the rails, the infrastructure necessary for you to layer all this innovation, the neobanks, the insurtechs, that infrastructure has been laid. And once again, because of mobile money. So that's a big one that I cannot deny fintech. I believe any startup that is in the creativity space or entertainment space in Africa is going to thrive. Right now, you have this buzzing young population that is jobless but extremely talented. So you look at, for example, the music sector with this Afro beats and so many music cultures in Africa just thriving. If you can set up a startup that takes advantage of creativity among Africans and uses technology to enhance or distribute that technology globally, I think they could be a winner there. So that's number two: financial services, the creative economy. And I think it's impossible also to ignore logistics. So right now, a lot of the infrastructure in Africa is starting to be laid in terms of road networks. You have a lot of businesses being set up in various areas, various cities, and you're going to need ways to get those products and services to the consumer. So whether it is distribution on the digital space, and which is essentially helping businesses to sell online, or whether it is hard distribution, so hard logistics in terms of your two-wheelers and your three-wheelers delivering goods, I think there's a massive opportunity there.
Yeah, absolutely. I'm sure there are more industries that have to be touched, but thanks for sharing your three top. And what actually about your three reasons to invest in Africa startups right now?
Yeah, so startup investing is betting. I usually like saying that because we make decisions based off of limited objective knowledge. So, for example, financial statements. Most companies are 2 to 3 years old. Probably started being audited maybe 1 or 2 years before you looked at their data room. So maybe you have 1 or 2 years of audited statements vis-a-vis private equity that invest in mature businesses that have 6+ years of audited financials. Innovation as well. We don't have much knowledge about the types of innovation that work for Africa. So when we're investing, we are almost guessing. So what we do is we look for drivers that indicate that this could be a success. And those drivers essentially are the ecosystem necessary for that product to succeed. So you're looking at the customers, the propensity to pay. You're looking at, for example, the fintech. For example, is the payments ecosystem developed? You're looking at the distribution network. Is it developed? And then you're looking at the talent. Is there enough talent for you to employ within this sector? So we use those drivers, those indicators, and if those indicators are ripe, then we try and invest in a business that is going to try and create a solution that leverages those drivers. When you look at a lot of those drivers that I'm talking about, they are ripe. And when you look at the gaps that we have in Africa, they are massive. And so what does that mean? It means that if one company is able to solve a problem for Africa, it's very easy for you to catch virality because the problem is large and the ecosystem, at least in certain sectors, has been laid. So it is about identifying how to solve a problem at the right price point and how to get to the consumer in a way that makes them prioritize your product within their priority list of purchases. So you need to make the consumer believe that they need your product and you need to price it right. Number three, you need to figure out a way to upsell or to cross sell. So once you bring a customer within your ecosystem, how do you extract more value from them? How do you ensure that they don't leave your ecosystem? How do you continue to sell to them and increase your retention over time so that the lifetime value of your consumers is high? Um, I think the last reason I would invest in Africa right now is I would say two more reasons. Number one, the negotiating power right now is with us as investors because of the limited history of venture capital. There's not that many funds within Africa. And so the few funds that are there have a higher chance of becoming winners as opposed to in Europe, in the US, where you're competing with so many other funds. So that's number two. And then the last reason I would invest in Africa is because of its population. I think at the end of the day, businesses are about consumers. And with this bubbling population that is, as I said, young, and trying to leverage tech solutions to not just be productive, but to be creative, and there's a huge opportunity for startups that created the right solution to move from 0 to 10 in a very short time.
And what actually role of angel syndicates in African ecosystem?
Yeah, so I think the biggest role right now that angel investors are playing is providing experimental capital for startups. And that's on the startup side. But on the investor side, it is investors who really want a chance to express their entrepreneurial energy. So you find a lot of techies who work in the corporate sector, or bankers, or people who've made their money in one way or another within the employment sector are looking for ways to express themselves entrepreneurially. And they use angel investing as a means for them to immerse themselves in the innovation entrepreneurship economy. On the angel investor side, I would say that's the primary motivation. It's not so much the commercial returns just yet. It is more so the desire to express yourself entrepreneurially. It is also the impact that you could potentially make by supporting a local business. And then for the startup side, I think the biggest role that angel investors right now are playing is the catalytic effect of their networks. So you'll find most angel investors are influential people or people who work within big organizations. And so once they invest in a business, they end up promoting that business or selling it within their organization or opening doors for the startup, be it through partnerships or even just advice. So, as I said, a lot of these, they call them tech bros who've made money in the tech ecosystem. In the US, it would be the likes of Elon Musk, providing a lot of domain expertise, advice, and direction in terms of product. So, it's more a mentorship, more an advisory role in terms of the value startups get, and of course, this experimental capital that is patient.
And this syndicate that you actually launched local capital. So is it still operational? Like who was actually those people who supported local capital, and how difficult it was for you actually to build the community of those angel investors?
Yeah, so local capital is still in existence, and essentially it consisted mostly upper middle class Kenyans who were looking to compete with venture funds in the startup ecosystem. So our thesis at a local capital was look, you have these amazing startups in Kenya and in Africa that VCs that are mostly owned by foreigners are investing in these startups and are ending up extracting all of the value from these startups. So a good example is Sendwave. Sendwave, which was acquired by World Remit for $500 million. And the founders were foreigners. The venture capitalists were foreigners. And so what this startup did is that it extracted value from African consumers. And then once that value was liquidated in terms of an exit, all of that capital was repatriated back to the US. And so our thesis was look, can we syndicate funds and help local angel investors to compete or participate together with these venture funds? So essentially, if you bring together 10 angel investors with $25,000 each, you have a 250K check, which goes toe to toe with the biggest local venture funds. And number two, as I said, it was going to these startups and pitching to them that if you take our money, you're getting this pool of supporters, champions, fans of your business who will do so much more than just one VC will be able to do for you.
Yeah, and in your actual opinion, for investor who want to join in venture capital industry, what is better, to join a syndicate or actually to become the LP in a fund? And maybe you can share with me like what are the pros and cons from your perspective.
Okay, so it really depends on what you're looking for in investing. If you're looking for returns in Africa, as I said, venture capital is a betting game. And so you increase your chances if you're able to participate in many bets for the same amount of capital. And so when you invest in a fund, essentially your money goes towards investing in a portfolio of 30, 40 companies. And so you have a higher chance of making an exit or getting a return from your capital because all you need is just one or two unicorns within, even just one unicorn within a venture fund's portfolio. And if you are an investor in that VC, you will get your share of the returns depending on how much you put in. Commercially, if you're looking for commercial returns, investing in a fund as an LP is definitely better. Once again, you have a better chance because of diversification of investments for every dollar that you put in. However, with VCs, you'd find they invest in a limited number of businesses. So there are different types of instruments that angel syndicates use. Some of them use simple investment agreements, some of them use special purpose vehicles, but essentially, angel investors typically invest in one company. So you'll have the angel syndicate, for example, having a team of deal originators, and they will originate, let's say, for a certain number of deals per month, and then they will shoot out those deals to the angel investors and ask them who is willing to participate. And then the angel investors will put their hand up and say, I like this company, I'd like to invest. And then the angel syndicate would then take all the money from these investors and then distribute the ownership of a special purpose vehicle depending on how much the investors have put in. And then that special purpose vehicle would invest in that company. So you're participating in investments one by one on an individual basis. Number two, you're using a lot of your knowledge to make those decisions. So if you are not educated on the innovation economy in Africa, if you're not educated on the types of instruments that work, in what makes a good business, you can easily make bad angel investments without knowing. So the benefit of investing through a fund is, of course, the fund has management fees they charge, which they end up employing a very qualified team, people such as myself who work within a fund that is then delegated or given the mandate to make those decisions on behalf of the LPs. So it's a lot easier because the LPs just sit back and get their quarterly reports, and they don't have to make the decisions about investing. However, if you are a person who's looking to participate directly in investments, if you want more control over your money, if you want to participate, let's say, in terms of advising your startups, if you want to be on boards, if you want to be more hands-on as an investor, it's better to invest through an angel syndicate. Those are the distinctions I would make. By and large, the structure is the same. So 2 and 20 in terms of the management fees and the carried interest. So you'll find that most syndicates and funds will charge 2% annually of the amount of funds that have been committed. And then upon exit, 20% of the profits would go to, in terms of VC, 20% of the profits would go to the fund, and then 80% of the profits would go to the investors. So it's the same in a syndicate. You probably have 20% of the returns going to the syndicate that is managing the investments, and then 80% will go to the limited partner. So in terms of structure, it's pretty much the same.
Actually, from a deals which I see through the Quoroom platform, the carry usually 20%. Sometimes actually carry is shared by the member of the syndicate who brought the deal opportunity, right? So probably there is a little bit more flexibility on really fee sharing with the members of the syndicate. And on the side of the fees, I think from the UK, US syndication experience that we have, so the fee is usually not at 2% annually, but rather 4-6% on entry on a subscription without a monthly payments towards this kind of the investment. There is actually regulatory reasons for that, because in US, UK, Europe, syndicates are very careful to not to be treated as a fund, including this fact not taking management fees, annual management fees, but rather the entry fee or subscription fee, which covers the expenses of the syndicate lead related to being a leader in this kind of the transaction. And my question is actually from operational perspective, it's quite interesting, like how difficult it is to set up a syndicate and how difficult it is actually to set up a SPV. Would those be some international SPVs, or it's actually the local SPVs that are created for such transactions?
Yeah, and let me just agree with you on that last point. You're actually right. Most angel syndicates will charge a one-time fee as opposed to an annual management fee, and so that's where the difference comes in between angel syndicates and venture capital. Essentially, you're being charged less fees by the the syndicate as compared to a fund which charges 2% annual recurring fees, which over the course of a fund life would accumulate to roughly 20% of the fund. So I agree with you there. In Africa, the regulations are pretty nascent, pretty non-existent when it comes to venture capital and angel investing. There's very few syndicates, and there's little to no policy that guides how angel syndicates are set up. So the two primary ways, well, there is one law in Kenya called the crowdfunding. It's called crowdfunding something, which essentially dictates how crowdfunding platforms should be set up, which kind of relates to angel investing. But basically, the two primary ways in which syndicates operate is by setting up SPVs. Special purpose vehicles are basically companies set up in tax friendly jurisdictions that the angel investors then take ownership of depending on their contribution, and then that entity is then used to invest in the startup. So that structure is, of course, a lot. It's more complicated than the second structure, which I'll just talk about, but it's not difficult. I mean, right now, because of technology and the democratization of consulting services, you can easily get a company registered in Cayman Islands or Delaware or Dubai in a matter of 2 weeks. So um, maybe the cost of setting up, I would say, is a little bit of a barrier, but the formalities of setting up, I would say, are not that complex. The second way in which I've seen angel syndicates investing is through investment agreements, which is basically a trust. It's like a trust agreement between angel investors and the syndicate, where the angel investor basically hands over or gives the angel syndicate the authority to invest on their behalf without having to set up a syndicate. So I've seen a couple of them doing that because it's much simpler. It's also less legally binding. I would go for angel syndicates that use SPVs.
It's actually similar to what we structure syndicates in the UK. It's also actually a trust agreement. It's an entity that is created specifically for investment purposes, SPV, right? Which is acting as a trustee in that transaction and in holding investments on behalf of investors. It's not a responsibility of the syndicate lead, but rather the trustee entity and nominee entity which is taking this role. And you can say that its nominee entity is actually this SPV. It's actually in the UK, it's reusable. So it's a one entity that can be used for multiple investments, but we would hold on a platform the sub-registers of all the investors who invested in a specific deal, so later on all distributions can be made. But it sounds like it's quite similar, and was very interesting to learn from you. Absence of a regulation is actually sometimes not a bad thing. In recent 20 years, 30 years of so that actually industries which were less regulated were growing the most, and the industries which were heavily regulated actually are still lagging in innovations. So about your actually aspiration for African venture capital industry and your personal goals, like what are those like futures that you envision for Africa?
Yeah, so I think right now we're still, of course, the vision is to have a thriving venture capital space that is responsible for most of the innovations that are used by that country. So we envision a future like in the US where the primary mode of streaming is YouTube, and that came from a startup. The primary social networking websites came from the startup ecosystem. Even in mobility, Tesla came from the startup ecosystem. So, of course, we envision a future where most of the innovation has come from the startup ecosystem, because what that does is it creates examples to encourage more capital, more angel investors, and more people to start businesses. It's proof of concept. It's a validation to tell people, look, this is evidence that innovation can have a huge impact in Africa and encourage more people to participate. That's number one, is a future where all of the innovation in the country has come from local sources. Because right now, all of the innovation in Africa has come from the US. Everything we use from social media to internet to music distribution platforms like Spotify are all foreign innovation. So it's a future where all the innovation we use as Africans has come from the startup ecosystem. And then number two, it's GDP. So we envision a future whereby the GDP of our country is contributed significantly from startups, because the only way Africa will catch up with the rest of the world is if we unlock the potential of startups. Because in themselves, a startup is an innovative product that has the potential to scale rapidly. And so it can take us from sectors in which we are operating at 0 to 1 and the rest of the world is at 5. It can take us from 0 to 4 in a very short period of time. But as I said, leapfrogging us from a point at which there's a massive gap to all of a sudden that gap being closed by technology. And I would really love to see a future whereby number three, so number one, as I said, is where the products and services we use have come from the startup ecosystem. Number two is our GDP largely contributed by innovation. And then number three is to see the industries that have the biggest foundational issues essentially gaining some momentum. So I can state, for example, agriculture is one which the tech ecosystem has had a very difficult time penetrating because the supply chain is non-existent. Farmers themselves are not productive. They're mostly in the rural areas where the road network is poor. They don't have mobile phones. They don't have internet connectivity. They're not educated. And so it's just so fragmented. Agriculture, I would say education and health are three sectors in which I want to see that foundation being laid by innovation from startups, the same way fintech or M-Pesa was able to create that foundational layer of financial inclusion. That's what I would love to see in those three sectors.
Yeah, Kevin, I definitely share your aspirations. I believe this is great continent and which deserves the growth and definitely the growth can come through the innovations. So it's good that they really have you as one of the leaders in the venture capital industry, and it was really great to hear your story today, and thank you so much for sharing the insights. So wishing you all the best in creating this and driving the ecosystem in Africa.
Thank you so much. I had a great time on this podcast, and in case anyone wants to reach out to me, I think you can provide my email. You can reach me on LinkedIn, Kevin Irungu, and we can have a conversation. I provide master classes and thought leadership on VC. And so if you have a conference, if you have any audience you'd like to educate on the same, I'm available. And as I said, I'm also an investment manager at a fund. So that's what I do. That's my day job. And so if you're a founder and you're looking for money, reach out to me and I will consider you for funding, take you through our investment process. And yeah, hopefully I'll hear from some of you out there.
Yeah, and I welcome everyone to subscribe to our Investor Return podcast, and I look forward to our next guest, because every time we invite a new guest from around the world to share their experience in venture capital and angel investing. Thank you, Kevin.